All right. Good evening, everyone. Welcome to Tuesday night with CSOMA. Thank you for being here to help build the CSOMA community. Here we go, 2026. As I hope you've seen, CSOMA is offering uh, a webinar on the second Tuesday of every month for the entire year of 2026. We have such an incredible lineup. You can see the first 4 months already on the CSOMA website, and we'll be continuing to promote. We have so many exciting speakers and topics coming this year. So please do sign up. Part of the goal of this is not only to bring you integrative medicine programming, practice development programming, but also to build the CSOMA community and connection. And you'll see as you join this webinar, for those of you that have been with us over the last 5 that we did in the fall and winter of 25, or if you're new to it, you'll see that this is it's not as formal as other webinars. We really encourage participation. And if you ask a question, you don't have to, but we're going to ask you, we'll invite you to come up and either do audio or audio and visual. We want to hear from each other. We want to learn from each other. We want to continue to strengthen the acupuncture community in California and beyond through meeting regularly every month. We're thinking of it as like the CSOMA Chong channel year. We just want to keep this nice, steady flow going and keep building momentum. So thank you for being part of that tonight. We've got a great turnout for tonight's webinar. Just a couple more things I want to highlight. So these webinars, first of all, yeah, Kim's just put it in there. Say hello. Where are you guys writing in from? We often have people from all over the country and all over California. So please do join in the chat and let us know where you're tuning in from. These webinars are free. We have a mindset of abundance at CSOMA. We want this valuable information going to anyone that is interested in it. That said, if you need continuing education credit, we do charge for that because there's processing and all of that and the fees that we pay to the CAB. So, we're asking for that contribution if you need CEUs. If you are taking California CEUs for this, you can check your email correspondence from amazing Kim Newman, who's at least on my screen to this side. So there's a webinar that came from, an email that came from CSOMA, and please do read that email in detail to figure out how to take your certificate. So in addition to every second Tuesday night from 7 to 9 p.m. in our webinar series, we're also hosting 2 live conferences this year. We will be in Southern California at Yosan University on May 1st and 2nd, a Friday and Saturday. We have a gorgeous lineup for that, and we'll start promoting that and open registration for that within the next few weeks. We'll also be holding another event in September in Oakland. So we're doing SoCal, NorCal. Hope we can catch a lot of you live and coming together in person for those events. Anything else I need to share? Kim, all good? Should we dive in? All right, let's dive in. So for tonight, we'll be introducing Ray Kong soon. But to start, we have our CSOMA past president, greatly beloved past president, Nell Smirsina. She is here to contextualize tonight's work. She has had successful acupuncture practices and then went on, in addition to a doctorate in acupuncture, to get her MBA and is really thinking about our profession and integrative medicine practices as business investments. So she's really here to help us understand that. Nell's going to open us up, and then we're going to keep going with Ray. So with that, Nell, I'm so happy to see you here. It's just wonderful to work with you again tonight, and I'm going to turn it over to you.
Thank you, Rod. This was such a fun coincidence, everyone. First of all, I'm so happy to see everyone here. This is a really important topic. I was kind of worried everyone would get scared away by it, the idea of selling a practice. But what's going to be really great about tonight's webinar is we'll see through the amazing info that Ray's going to give us, and then hopefully I can sprinkle in some good context that really the best practices that you can have to make yourself successful and have options do make you a good practice to sell. And that doesn't mean that that is something you're locked into or you have to do, but it's an amazing thing to have options. I had a practice in Beverly Hills, California for several years. And I was very proud of the success that I had with it, but I did a lot of things wrong and learned a lot of really great lessons through that experience. I started out working out of network with insurance in a really integrative medical suite. Absolutely loved that experience. It was at a neurology practice. There were naturopathic doctors there, chiropractors, PAs. We had Reiki, craniosacral. I was the acupuncturist there, and I loved working with providers at that level. During COVID, kind of saw the restrictions of a shared space. You don't have, really the autonomy that you would want. And so ended up getting my own physical location and getting larger treatment rooms, smaller waiting room. And we really leaned into the concierge aspect of our practice. So it was a lot of in-home, on-site, really bringing care to patients who might not be comfortable coming into a medical facility. So we did a lot of pivoting through that process. Also leaned into telehealth. You all know in California, we can do labs. It's not like that in the rest of the country necessarily. So, very fortunate with that and being able to integrate functional medicine. But really, what ended up being a challenge for me, even with, being able to scale and have multiple providers and different specialties under one roof, which is amazing, is I really centered the practice around myself. And every acupuncturist, I think, can relate to that because most of us start out as solo providers. We really care about our patients and want to make them feel comfortable. We want to educate them. We want to have this personalized experience. But if all of our relationships, all of our branding, every single touch point is 100% dependent on us, I realized the hard way I had really built myself a very successful job. That if I were to stop working or if I wanted to shift focus or spend even more time on advocacy work, I was really limited and felt very like chained to the treatment table at that point. And that's not, how any practitioner wants to feel. And so I think there's a lot of great best practices where we can still have the best patient care possible, but be thinking about, okay, if I do want to retire one day, or if I want to bring on other practitioners or diversify services and be able to have different types of providers come in, or get more into telehealth or in e-commerce, there's so many ways that we can think about what our future looks like as providers, as business owners, so it doesn't feel as restrictive as a job and it feels as meaningful as we want it to feel, as we dream it's going to feel when we think about how we're going to help patients. Um, the reason that I said this was such a funny coincidence being here is I was asked to come and speak to you guys about the successful practice aspect of my background, which I'm happy to talk about, and I'm going to stay on for the Q of A. But right now, I'm actually full time looking at acquiring businesses in this space because I fell in love with helping providers grow businesses so that they can help more patients. And so that's really what I'm looking to do in the integrative space to help continue to transform healthcare in a different way. So I think we all have an opportunity to lean into our strengths and our passions. And I'm going to turn it over to Julie to introduce Ray. But I know my hope in hearing from Ray, and I've seen a little preview of some of the content, and I know we can ask some really good questions, is that you all are able to think about how important it is to have options, and that more options means different ways that you can help patients and know that that can evolve over time. So I will turn it over to Julie. I'm so happy to be here. I miss my CSOMA people. I miss my California people. License is still active, by the way. We'll never let that go. And looking forward to tonight. So thank you all so much for having me.
Good evening, everyone. Thank you for joining us. Thank you, Ray. Thank you, Nell. Okay, Ray Kung is the owner and principal business broker at Trans World Business Advisors, serving San Jose and Milpitas. He helps entrepreneurs and small business owners understand the real value of their business and plan for successful, well-timed exits. Backed by Transworld's 40 plus years of global leader business brokerage, Ray specializes in business valuations, confidential sales, and exit strategy and planning. So Ray, also a great community leader in his church, active in everything that has to do with youth leadership and all that fun stuff. I give you Ray.
Wow, thank you so much, Dr. Julie, Nell, Ross, Kim, and the CSOMA community. Thank you so much for inviting me here today. I just want to say, or just seeing everyone in the chat where you all are from. Of course, I'm seeing some great places here in California, but even outside of California, which is amazing. So at the beginning here, I just want to express my appreciation for being able to serve this community um, tonight, and for hopefully this is something mutual. One thing that I love about the business broker profession is how much I get to learn about different industries. So even though hopefully I could be here and add some value in what I see in the process of what I see of owners doing right and owners not doing right that could lead to a successful exit. But I'm also hoping I can learn from you all about your industry and the ways that things can grow. And ultimately, whether you work with a business broker and you're ready to sell, it's always going to be a partnership and there's going to be some mutual learning here. So I invite you all to be able to comment in the chat or ask some questions as you go on. I think Raw will help jump in if there's something pertinent. And then I invite Nell to kind of jump in at any point if she sees something on the slide that brings to her experience of being a practice or what she's her mission now to help acquire and to exit Oriental medicine and acupuncture practices. That's all fine with me. We're going to play it by ear. I'm hoping that everyone will leave here. If you are owning a practice, you will take away at least one successful thing that you can implement in your practice right now with the exit in mind, to have the end in mind and to be able to hit your goal. Because ultimately, successful businesses, especially in the healthcare space, the alternative medicine space, and the acupuncture or oriental medicine space, just means better outcomes for your community that you serve. So I hope this knowledge will go far and beyond so that more and more practices can be successful and more practices can have a legacy over to the next generation of practitioners. And ultimately, it's just so that we can serve our communities better for a longer period of time. So I hope all of that and above, you'll get some nuggets and gems out of what I'm going to say. Okay, with that, let me share my screen. Okay, so first of all, a little bit about me. So I actually got my start in higher education. I actually got my master's in higher education. And at that time when I graduated, it was 2011 with my master's degree, and it was at the tail end of the Great Recession. And no one was hiring in the university and college space. That's where I wanted to be. And so I thought that yeah, it's about sharing stories, right? So I'll share a little bit of personal stories so you get to know me a little bit better. So I had one interview, okay, master's degree, brand new, Master's of Higher Education Administration. I had an interview to be a server in the UC Davis cafeteria, and I didn't get hired. I was rejected. And this was 2011 in the Great Recession, so I thought my career was over before it began. But long story short, that actually opened the door in a side route in the tech industry. So I was able to combine my technical expertise as well as my education background to have a successful first 14 years of my career in the tech industry, in startups and public companies, seeing them go public, running an internal business with an internal P&L, having to hit $2 million, having to serve customers large and wide, and really being able to get to really cut my teeth there. After about 14 years, I got a little bit itchy to do something else. And so that's where I learned about business acquisition. And so I took what I knew from corporate and I became what they call an acquisition entrepreneur. I had to learn from the buy side what it means to do a research, to do the due diligence, and to acquire companies, and then to run it, grow it, and exit it. So that's where I actually got my start. And I started that a couple years ago. And long story short, I realized I enjoy the research, due diligence, deal structuring, and transaction process a lot. And so I decided that I would do this full time. So I ended up adding the sell side to the practice, joined Transworld Business Advisors, which is the largest business brokerage in the United States. And now we're doing just business brokerage services where we do business evaluation. We actually do brokerage services in which we help you sell for the commission, and then for small and medium-sized businesses as well as lower middle market. And then we could also help consult with the exit planning as well. So I just wanted to let you all get to know me a little bit and what I bring to the table.
Ray, could you quantify for the audience what lower middle market is?
Oh, thank you so much. Yeah, so lower middle market is an M&A term, usually means about 10 million or less in revenue. And I think middle market is where you get 10 million plus. And then of course you have the general M&A folks. You know, we're in California, so you see these on these news reports, $1 billion deal, right? Who was going to sell Warner Brothers, right? $86 billion. That's really up there. But Transworld really specializes in helping small business owners, let's say just up to about 10 million. That's our sweet spot. Thank you so much.
Thank you.
Okay, so why should you plan your exit early? Now, these are numbers here, and I recognize just from talking to you a little bit, there's not just numbers, but there's also some people matters to consider. Why plan your exit early? Now, of course, you see this here. If 70% you have no plan or a lack of formal strategy, you're not going to hit what you want to do. It's great that you have a business now, but if you at some point there needs to be an exit just in the life cycle of the business, and it's better to have a plan and not have a plan. And because of that, it takes a long time to prepare. I would say in a window of 3 to 5 years. You need to think this alongside of your own retirement. Or if you want to exit a business to start another one, this is something of a long-term planning. If you think about one day you want to sell this year, but you haven't been thinking it through and preparing for it the previous 3 years, there's a lot of things when I go into businesses and I see that, oh, there are some yellow flags that could have been avoided and it could jeopardize the actual transition. And then, of course, we don't do this for the money, right? But obviously, uh, the higher valuation of the business is not just in how much money you could get out of it, but how easily your business can transition to your buyer and the next practitioner to be able to carry on the care for your patients in the future. And let's see where this is. Okay. Okay. So and now, if anyone here has any other things on this book about the market trends for Oriental medicine practices, acupuncturists, and I think this goes with the alternative medicine and integrative practices outside of traditional medicine. I think this all trends as well. It's a growing industry. I hope that's true. There's a lot of interest out there. There's growing recognition of the legitimacy of this profession, and many people are finding so much success through getting help for their health issues through you all and what you're serving, and that's being recognized. And so there's more popularity, there's a higher trend, there's a higher acceptance, and so I hope that is translating for you to just having more patients. If you want to put in chat what you're seeing in your own practices, whether you're seeing these trend lines, that would be helpful as well to share with everyone. Okay, exit options. So obviously, Transworld, what we do is we help out most with third-party sales, right? We help transition out to another buyer. We do confidential advertising, and then we match buyer with seller, and then hopefully there's a transaction. Of course, other ways to be able to do it is succession, right? Maybe you could see someone within your own practice. One day you think that this person can do more. They could be more than just a practitioner. They could be a manager. They could be a leader. They could be an owner. They can understand the business side, and perhaps maybe you want to keep an eye out on them, perhaps to maybe transfer the business over to them, or using seller financing for a way to be able to do that. And so that is an option. Seller financing is really critical in any kind of exit planning. Folks who do seller financing, that is, you become the bank and you provide the financing to the buyer and they pay you back with a certain amount of interest, and it's just you negotiate what interest rates that you want. So this is pretty common. And in fact, businesses, and I will have to say this, when I talk about business selling, I'm talking about it kind of in general. And I'll mention where I'm seeing something in either the healthcare or specifically in your acupuncture space. But seller financing in general is a good practice for sellers to be open about, because it helps the buyer reduce the amount of upfront down payment that they need. And as well as it could also help your succession planning, because then you could transfer it over to someone who's you've been working with for years. You could take over, and this is a way that you'll be able to help them out. And typically, a third-party sale with some cash down payment, a loan of some kind, and some type of seller financing, that is the most common transaction that we see. Okay, and then third one, M&A integration. Those are for larger folks. And believe it or not, like Nell, there are groups out there looking to acquire just within the healthcare niche. Um, I had a counseling business, and it actually surprised me the amount of actually large buyers who are looking at successful small businesses, owners who want to sell, and then they fold them up to a larger shop. And then, of course, I hope this doesn't happen for anyone, the liquidation size. That's just closing down. That just really breaks my heart. So I hope that doesn't happen to anyone here. Now that you want to jump
Greg, can
in?
I add something? Yeah.
Absolutely.
Because you were talking about the market and then, talking about their groups or, entities that are more focused on healthcare. I want to share with you guys because I think there's a lot of times we don't realize in this profession how much outside interest there is in this space, and how really positive integrative care is looked at this point. I'm with a group now that is it's an operator-led buyout program. So they invest in like people such as myself who have a niche area of expertise for business operations. And then we get to create our investment thesis. So the businesses I'm looking at potentially acquiring are only in the integrative healthcare space. So that includes like regenerative medicine, it, includes acupuncture, chiropractic care, multi-specialty groups, like anything that is already integrative or that I can see in the future becoming more integrative. And, I had an investment fund really buy into that and be excited about that. And so I think that's important for people to know, because we get very tunnel visioned in our own practices, and there's a lot of interest and excitement about what this medicine can do for patients and what the industry is looking like moving forward. Julie
I just
hopped
want to
on too.
jump
I didn't
in.
know if she wanted to share.
Yeah, I have to agree with you now on that. I actually have gotten a few like cold emails from other business brokers saying, hey, we have people that are looking to buy integrative medicine clinics, and you look like you might be a good option, right? Come talk to us. And I'm like, I'm going to talk to Ray. That's a different story. But yes, you're right. I just wanted to jump in and say that it is out there. And sometimes we do get the tunnel vision. We're just in our practice. We're just doing our thing. We're like, how are we surviving to the next thing? But this will help elevate. Thanks, Ray. Just wanted to share that.
Absolutely. Yeah, and it brings to mind, I also had a friend. He was an acupuncturist, and the way that he got his first practice was through a retiring acupuncture. So that's not on here, but I hope all of you are thinking about the next generation that's rising up and giving them opportunities to be able to pass it down as well. Okay, this might be another thing, Julie, and now what you're seeing here. So who is buying acupuncture practices and integrated medicine and virus stuff? This is, I don't think this is a surprise, and so I would welcome anyone's uh, what they're seeing here. So obviously, number one, it's similar to what I said in the type of your exit options. Number one, individual practitioners, right? A successful employee, a younger a younger practitioner who may have been practicing for years and now wants to own their own practice. But there's also others as well, healthcare groups, other wellness center operators. I'm not so sure about the spa and wellness chain, but that's pretty out there. And then of course investment groups. It looks like Nell is getting deeper into this. There's a lot of interest in this space as well. So this is just to expand your horizons on that there are buyers out there who is interested in the space, and it's not just a solo practitioner that who wants to become an owner. But of course, I would say that that's the most common. That's typically what I see of 80% of folks who are interested in buying a healthcare practice. And so that's what I'm seeing. Now, or Julie, if you want to hop in, feel free. Otherwise, yeah,
Nope, I think you're spot on.
great. Okay, so common objections. This is more on the side of the seller. Something that I'm really picking up the experience on is that selling your practice, and of course, I come from it from a very, numbers, finances type world because that is how I provide my advice. But also, I'm just seeing just how much I like how Nell put it one time. It's an identity shift. It's about switching from how you have been and moving into something else. And so there's a lot of psychology that goes into this. And one of my mentors, when I got started, said that, as a practice for a business broker, you'll play about 50% a kind of a financial advisor role, and the other 50% as kind of a, a pseudo therapist. And I think he was partially joking, but I kind of see what he's getting at. There's just there's a lot of things that is deeply held emotionally for all of you all. You own your practice, you pour your heart and soul into it. This is really your identity, and it's connected to how you are really helping people. And so shifting from that and saying like, well, what is the next level for me after that? There's a lot of internal objections and a lot of internal controversies that I see owners being able to go on. So typically I would talk with an owner, and it not only would take them 3 to 5 years to just get the finances and get the things that are in order that I would talk about. And that's really important because if you don't have those, it could be red flags and wouldn't be able to sell. But really, it's really about knowing what you want to do after, right? So having an exit plan, having a very clear vision of what your life will be like, how you will be contributing in the future. And then that helps facilitate an easier shift over from selling a practice to whatever it is in your future. So these are some common things that I see. Okay. I want to talk a little bit more about some of the reality here. You could look at some of the myths yourself. Um, one myth that I see is I could sell quickly. Most business owners don't realize statistically how long it takes to sell a business, even if it was absolutely ready and it's very attractive. Probably the very least, if it's optimally ready, it has a great EBITDA. There's a high buyer's market, and let's say everything is a place. great patients, really clean books, a lot of really great long-term staff that they're not going to get scared and go with the transition. They'll stay on afterwards. Even then, probably you're looking at about 6 months. 6 months is everything works right. Most of the time it takes to sell a business, and this is overall, is usually about a year on average. Usually about a year on average. And during the time when you're trying to sell your business, you need to keep your patients going. You actually need to show your books are actually steadily increasing rather than decreasing. So it's not an easy thing to decide to sell your business because it just adds this other layer. So that's just to set your mindset that this is something that you are going to do in the future, but you need to work yourself to get ready for it. Because if you're not prepared for it, like even cognitively speaking, add this entire cognitive load to get your business ready to sell and talk through a lot of buyers and work with business brokers and accountants and lawyers and all of this, it could be tough to be able to sell. Um, the other thing about the rush to sell mentality is that what I tell clients is that the best time to sell is when you do not need to sell. The best time to sell is when you do not need to sell. Some of the saddest calls I always get is folks who call me and they want to sell their business, but it's not that, but they need to sell. And typically, if your business gets to the point where you need to sell, it gets very hard to sell. And actually, the rate of selling for folks who do need to sell is actually very, very small. So this is why I'm really passionate about talking to a community practitioners way ahead of when you're ready to sell. So I hope you have this in mind. The owner must stay. So strategic planning pays off more than rush to sell. Secondly, the owner must stay. So especially for healthcare practices where there are patients, yes, it is always a good thing that after the business sale is over, you meet with your patient again together with the new business owner, especially if you are very um, patient facing. If you are just the manager and the business owner and you had most of your staff being patient facing, that's something different. But if you are a solo practitioner or you still have a small business and you yourself are patient facing, it's a very good idea to plan at the transition phase to introduce the new buyer, who's also a practitioner, to your new patients and tell them exactly why you and give them a glowing recommendation. So that way, patients don't leave. And that would, but the myth that the owner would have to stay for a long period of time is typically not true. And this is overall for the business side. Uh, I really find that after a buyer buys the business, they would negotiate for maybe 3 weeks to a month that the owner would stay. But typically they find that within the first or second week, the buyer's like, got this. And he's like, okay, we're okay. We're okay. You don't need to be here anymore. And there could be some awkwardness to get involved. So if you're worried about this myth that you have to stay behind, that's a myth. Oftentimes a buyer would like a clean break. Now, there are some situations within healthcare practices themselves that the owner has to stay because maybe the provider, the insurance provider, it's under that business or under that owner's name. And so it makes it easier and it takes a while to switch that to the new owner. And so they'll be able to have some of the insurance providers being able to send checks over to a new business entity or a new business name. If that's a different story. But in terms of that, the new buyer would want the old owner to stay. Usually they would prefer some clean breaks. Okay. The rest, the rest of the stuff I think kind of speaks for itself, but I think those are the things that I really want to hit on this slide in particular. Okay. So we're going to do a quick self-assessment and see if there's any questions or inputs at this point. After this self-assessment, we'll do a quick break. And then the second part of the presentation, we're going to go further and deeper into the nuts and bolts and things that I see in setting up businesses successfully for sale, and really things that you really need to think about from the financial side. So if those of you hearing this and you want to follow along just to see where you are, we could do this quick self-assessment. So if you want to get a piece of paper or a calculator out, I'm going to go through each of these pillars here. I'm going to go through each of these questions, and I just want you to score each question from 1 to 5. 1 is no, and 5 is absolutely yes, and then add it up in the end, and you can get a good sense of kind of where you are right now. So if you're ready, we'll go through the first pillar here. So financial readiness. Okay, from 1 to 5. 1 being you you don't you don't know at all, or just absolutely not, you know. Are your financial records clean, organized, and easily accessible? This is the top thing, and I'll spend a lot more times than what we mean about clean, organized, and easily accessible financial records. What we mean by clean is that, is there a lot of personal expenses in there? Are the categories correctly marked down? Do you have a CPA working on it, or are you just working on it with QuickBooks? This is probably one of the biggest ones. Okay, 1 to 5. So 5 is absolute yes. 1 is I don't know or no. 2, do you have at least 2 to 3 years of consistent, profitable financial statements? 1 to 5. Is your practice financially stable and showing consistent revenue? Do you understand your practice's EBITDA and key financial metrics? EBITDA, we'll talk about this later. Actually, the metric that's much better for a small practice, which I'm assuming most of you fall in, is something called SDE, Seller's Discretionary Earnings, also called cash flow. And we'll talk about that more in detail. So if you know EBITDA or your SDE, right, and you know even what it is right now for your business, say 5. If you don't know what this is, or you never looked at it or was interested in it, you're put down to 1. Okay, operational readiness. Are your practices, systems, and procedures, patient intake, billing, scheduling, well documented? Can your practice operate efficiently for extended periods without your direct daily involvement? This is a function of how much work and transition period the new buyer will need to have. Is your staff well-trained, stable, and capable of managing day-to-day operations independently? Are your patient management electronic health record systems up to date? I would also like to point out, is this all digitized? I've spoken to some retiring folks in the healthcare, and they've been doing things all on paper, and they have some old records that they need to keep for legal reasons. But do you have this? And then everything is accessible. Okay, market readiness. Do you have strong patient retention rates? Is your practice experiencing consistent growth or at least stable patient numbers? Do you have a strong positive reputation within your community and online? Are your services well differentiated from competitors in your area? And then finally, but of course, this is always a big component, personal readiness. Are you emotionally prepared to step away from your practice and patients? Do you have a clear vision or plan for what you will do post-sale? This is super important. We have this saying in the business brokerage world, every deal dies 3 times. Every deal dies 3 times. So that means for me as a business broker, I'm prepared helping through a client and a buyer that a deal will die at least 3 times before it gets through. That is to say that to sell the practice is a lot of things could happen. There's a lot of variables could take place. So if you are not personally have a very strong, clear vision of what you want to do afterwards, it can make going through that transition a lot tougher. And the same for the buyer side too. If you don't have a very clear vision of exactly what you want, then it may be harder to get the deal done. Okay, are you committed to dedicating time and effort to a smooth transition process? And have you discussed your decision with key stakeholders, family, and advisors? Okay, so if you've done this, if your total score of, I would say 16 above in each category, then that would suggest a strong readiness. Okay, and then lower scores may highlight some things you want to have some reflection on, and perhaps even things that you wouldn't want to improve on in your own practice in this coming year. Happy New Year. This is a really great time to do that. Okay, so I think this is a good time to put a little pause for a quick break. Ra, is this a good time to take a quick break? I'll throw it back to you.
Sure, I think so. And let's see. There is one question that maybe we want to take a look at before we go to break, and I'll read it or ask someone to come up. I think it's Maija. I don't know if you're able to see that in the chat. And let's see if Maija
Maya,
or they are
okay.
still here. I'm gonna, there we go. I
She's
have,
saying you made her name very fancy. It's Maya.
oh, Maya. Oh, okay, Maya. Oh,
Oh,
yeah,
oh, hi, it's
awesome.
Maya.
Hi, Maya. Thanks for being here. I figured I would just have you come on and ask your question. It's a good one, and maybe we'll address that question and then go to break. If is that okay, Ray? Does that work for
Absolutely.
you?
Yeah.
Okay. Hi, Maya.
Hi,
Thanks for
Maya.
being here tonight.
I appreciate it because I love this conversation. I love, of course, all of us acupuncturists want to be kind, caring people, but doing things on a higher level as a business is very intelligent. And I do know many practices and people who have gone into practice and then created a brand specific to their practice, whether they call it their name or the name of the practice, like Tao of Wellness or whatever. And I'm just curious about how this strategy of selling a practice then is connected to selling a brand related to the practice. And I
Yes.
ask this because I'm a regulatory specialist who works in the industry, and there's complexity with sometimes dietary supplement brands. So I'm just being curious.
Absolutely. And so you have a lot of options there because if you have a brand and if it's run off on a different book, you could actually you could actually sell the practice without the brand, or you could include the brand in the practice, and then we could evaluate the brand and the practice together. So later on, actually, when we come back to the break, I'm going to talk about how having multiple lines of businesses and services actually increases your multiple. So I think this factors into that, Maya. And I think you mentioned it, so you know if you brand it as you, like your name, like if you are the brand, that could become harder to sell because you need to go with the brand. So the more that you can make it a little bit, you know, like Batman, it's a symbol, right? Anyone could be Batman, then someone could take it over.
Very smart.
Yeah,
Yes. Thank you very much. I appreciate that. That is good advice. And also that connects to because I deal with a lot of trademarks, licensing agreements, and that in theory, if you create a brand like Tao of Batman, then you could trademark that, and then it has worth on a certain level too. So that thank you so
yes,
much for. I really
yes.
appreciate this
The,
conversation. Thank
the
you.
trademark of that. And that actually reminds me, because even in your practice too, I know you all want to do the best for your patients, and some of you, even your practice is your reputation, your personal reputation as an amazing healer. And that's really great to build off of. But eventually, you want to think about how to be able to create room for other people, just so that if you're planning to exit at some point in the next 3 to 5 years, again, if your practice is you, that becomes very hard to be able to exit into a third party situation unless you maybe bring up someone from the inside. If you have a specific philosophy or reputation and you cultivate someone from the inside to kind of carry on that, that's something to also be aware of.
Fantastic. Great question, Maya. And it sounds like you're doing really cool work in the profession. I love coming together in these settings and hearing from each other because there really are so many different ways that we can go from this training and a lot of different business avenues aside from just clinical delivery. So it's really nice to hear from that. Thank you for that question, Maya. Nell, anything to close out this first section before we take a break?
No, I think it's been good. Excited to come back.
Yeah, this checklist is great. Okay, so why don't we take 10 minutes? Let's come back at 7:55 and then Ray has some more material for us and then we'll have a more robust Q&A and questions. So everyone go grab a cup of tea and a nashi, something fun to eat, and we'll see you at 7:55 back here. Thank you so much. All right, everyone. 7:55. Boy, 10 minutes can go fast. Especially when I'm reading the news. So, welcome again. Welcome back for the second part of tonight's webinar. And I'm just, Ray, going to throw out one thing to everyone in the crowd. Thanks for being here. Thanks for being part of the CSOMA community. CSOMA is really doing everything possible to help continue to connect us all, because we know that being connected and mutually supportive is one of the most important things to continue to strengthen and sustain our amazing profession, so that we can bring this medicine to patients. That's what tonight's webinar is about. It's really about building successful practices, because when we're successful, we're sustainable. And that means more of this gorgeous medicine gets into the lives of our patients who need it most. And CSOMA is here to help provide a platform to do that. So hopefully a lot of you are CSOMA members. If you're not a CSOMA member, please go to CSOMA online and consider joining. We do a lot of advocacy work, legislative work in both California and at the national level. You can see just how much activity we've done in the last year. Amazing corporate partners help offer benefits to offset the cost of your membership, which really is, it's kind of a professional responsibility that every other profession engages in, which is supporting their state organizations so that we can make sure we have a strong profession. So if you are a CSOMA member, thank you for being a member. If you're not, thank you for being part of the CSOMA community, and please do consider membership. So with that, Ray, I turn it back over to you, and thank you so much. This is just so exciting. Look forward to part two.
Perfect. Awesome. Welcome back, everyone. Well, I hope in the first part you got a little something out of that, at least as you're imagining your own practice and what your exit is in mind. Whether it's this year or in 5 years from now, I hope everyone has a successful exit. The second part, we're going to cover through more, I would say, the nitty-gritty. So more of the details, as if you were my client and I was kind of generalizing some things, some advice that I would give to you on what you would have to do to get your business ready for sale, and things that I see within the sales process that can really add friction to the deal process or even stop it altogether. And so hopefully, if you have an exit in mind in the future where you do want to sell, I can hopefully give that information to you now so that you're ready and it's a little bit more preventative rather than fixing it later. Okay, so let me transition. Okay, so let's talk about patient loyalty. This is in general for business brokers in general. Here, of course, we're calling it patient loyalty. Of course, for businesses in general, it's about customer loyalty, customer retention. What are reasons why a buyer wants to buy an existing successful business rather than growing it from scratch? You would say, well, of course, the profit. Well, absolutely the profit, but the profit is a proxy of a very happy long-term customer that would have taken years and years and years of goodwill and service to be able to win that customer's trust and loyalty. That's true of all businesses. Of course, I'm talking about your practice as a business, but of course, most of your quote, quote, customers, they're patients, right? These are folks who have trusted you with their health, and they're coming back to you hopefully again and again and again, and you have delivered them value in the form of healing, in the form of prevention, in the form of better health, better health outcomes, and improved quality of life. That is going to be a big key story that you want to tell in multiple different levels at the time of your sale. Of course, it needs to show up on paper. That's the first thing that buyers are going to look at. If you were my client, I would ask you to put together 3 years of financial documents. And that's the first thing. After a non-disclosure agreement is signed, a buyer will confidentially get 3 years of your financial records, either tax returns or P&Ls, balance sheets, as well as kind of a brochure. We call it a SIM. It's like a little brochure that gives the highlights of your business history, And we could tell a little bit qualitatively about how your business stands out for others, how your practice runs differently from others, how you've been running it, what your philosophy is. That's just step one. If a buyer gets past that stage where they see the proxy numbers and they like the story and then they meet you, eventually they're going to come down to asking you questions about your patients, your patient retention, how you grow your patients. And they need to be able to get this information without talking to your patients because well, if you're selling on your own, you can have them talk to your patients at your own risk. I would always advise never let them talk to your patients. As a business broker, we want to respect the confidentiality. We want to be able to manage the process end to end. We don't want to scare everyone, and we want to control the transition process and give every patient a very good transition to a new practitioner. So that means in lieu of talking to your patients directly about how great your practice has been, as they're thinking about whether or not they can pick up your patient base as a way of baselining a success rather than starting from scratch, zero patients, you need to be able to show that by proxy, not directly. So here are some things that you want to build up over time to show potential buyers without them having to talk to patients directly. So document retention metrics. And you saw in the past some of the checklists of things. Are you ready to sell? Some of the things are here. They could show that retention metrics is something that I hope you're track. Even this is even healthy from a business perspective. How many patients continually come to see you? Now, of course, if they're healthy and they don't need to see you, that's one thing. But for the reason why they see you, how many they do that? And I'm sure maybe Nell or Dr. Truly Tran or folks on the line, if there's more specific obviously I don't run a healthcare business. So you and I hope your industry could talk about what metrics you provide that tracks patient retention. That's great. But I would ask if you have that, that would be amazing. You could see that in the books, recurring revenue. Uh, we protect patient confidentiality. We wouldn't show this patient came to see you this many times. But going back out for customers, I have other clients. I ask them to give me a little pie chart and say, out of all your customers, how much percentage does each of your customers take? I have a client where 67% of the revenue comes from one customer. Another client, almost 80% comes from two customers. Now, put yourself in the buyer's perspective. If 67%, 80% of your revenue comes from one or two customers, would that increase the chance that you would want to buy or lower the chance? Obviously, that throws you want to think about it a lot more. And you'll be a lot worried during the due diligence and transition period that that customer is going to stay around. Now, if you're a B2B business, obviously it's much harder to churn a customer if you're an approved vendor. Likely for your industry, and please tell me and educate me, it's easier to switch, right? It's easier to switch. The cost of retain the opportunity for just seeing a different provider is likely easier in your industry. So anything that you could show there would be great. Referral sources. I think all of you know this. I probably the dream of many small business owners is you don't have to do as much outside marketing, and your business are driven by referrals. And and by the way, just a big plug to BNI is a great place to be able to cultivate great referral sources. I'm part of BNI, so just a little plug. Showcase testimonials. I hope you're all doing this, your Google page, your Yelp page, or any other place where you could do online reputations. Collect these over time. Even if you rotate them on and off, find a way to be able to show this. And I don't know if you have a specific CRM or a patient database that helps you be able to track all of this. I don't know if that's there in your industry. Please educate me more. I know in other businesses, Salesforce or something that they could track in a CRM or record that you could show that. Okay, let's talk a little bit more about valuations. So what we do as a part of Transworld is we have a service, even if you don't want to sell, we have a service, and most business brokers have this service where they could do a point in time, what we call a broker's opinion of value, a point in time valuation of what we believe your business is worth. And we use these valuation methods and we be able to add them together and we do a really great presentation to give you a baseline of what your business is worth now. And we found that that's just very helpful for businesses to get a really realistic number of where they are. And we give them some advice looking through some of their financials and talk to them about their practices, some things they want to think about doing this coming year so that they can improve this year. So we think this is just healthy, a healthy business practice. And so we do this all the time. But let's talk about some of these evaluation methods. The first one, income base. This is probably for small businesses, probably 80 and 90%, we would use an income-based valuation method. I mentioned this acronym before, SDE. It stands for Seller's Discretionary Earnings. What that means is how much money is in the business from a buyer's perspective when they go and look at a business to buy. So typically, SDE is different from net profit in that it takes your net profit and it adds any of your discretionary expenses that you either took out personal. So, for example, if you have a cell phone or if you have a vehicle that is expense to the business, we would add that back. This would include like one time you bought a whole bunch of new equipment. That's a one-time expense. We would add that back and it will add to SDE. Any anything that you pay yourself out of the business, officers and owner salary as its own category, we have this process where we add it back. That way we normalize how much money is in the business that a buyer would look at after they buy the business. Can expect within a year, they would have a similar amount of that as working capital to work on. So seller's discretionary earning and knowing what your seller's discretionary earning is very important for the basis of establishing what a valuation is. So if you don't know what your seller's discretionary earnings is, of course, we could help you, but you could do a back of the napkin. If you are working with a CPA and you have a P&L, at the bottom of the P&L, you have what your net profit is. Then add back everything that you spend either on yourself or one-time expenses. Or if you have a loan, you can add back the loan because the buyer isn't going to take on your loan. So you could add that, what you pay for the loan, you could add that back in. And if you do that, you could roughly get about what your seller's discretionary earnings is. And I would encourage all of you, at least once a year or every half a year, to do that quick financial calculation to be able to establish that. Okay, STE is what the majority of buyers evaluate a business on in the small business world, SDE. You may have heard of something called EBITDA, earnings before interest, taxes, and amortization. That metric is usually for larger businesses. If you're doing, 3 million, 5 million revenue plus. So likely most small businesses don't need to worry about the EBITDA metric and they could worry about the SDE metric. So I encourage you to do a back of napkin to figure out what that is. And it's a great time to do it now at the beginning of the year. Now, asset base. This focuses on usually what's on the balance sheet. These are the physical things that you have in your practice that has value. Some of you may even own the building you're in. Obviously, that could fall into the evaluation, but of course, actually, as a business broker, we evaluate that separately because that's real estate and that's evaluated differently. And by the way, you would sell it separately. You would sell it separately. but at the same time with the same buyer if you wanted to do that. But the asset-based evaluation method is actually not a good way to evaluate it. And typically we fall back on asset-based evaluation method when the income-based, the STE, shows negative value. So unfortunately, if you're looking at a situation, probably the worst case, and I don't wish this on anyone, where you have to liquidate or close down, the value of your company is probably not based off of your income or your profits. It's probably based off of the physical assets that you possess. And we would just sell it based off the evaluation of that. So asset based is not something we would recommend, and it's for emergencies. And so I don't wish that on any of you. Market based is when we pull comparables out from the market, and I will show you some of our proprietary, we have to pay for these comparables to get access to these databases that just shows many of the transactions in different industries from actual business sales. And what we do in our business broker's opinion of value is we combine income, asset-based, and market-based approach to establish a multiple, and then we show you with some calculation exactly what we think your opinion of value is. Now, these are some rules of thumbs down here. Small practices, less than 200K revenue, maybe it's about half or half a multiple, up to exactly what it is of revenue. And actually, I'll show you some actual evaluations. I might actually need to change this to net profit or SDE as well. And then, of course, establish practices. And if you're making close to $1 million, that could be a higher multiple because likely you'll have a higher SDE. Okay, at this point, I'm actually going to switch gears here. I'm going to show you some of our. So this is a database where one of 3 databases that I pull multiples from, like actual deals that happened. And so I looked up your NAICS number. I think most of you all should be, when you file your tax return, you're 621,399. Correct me if I'm wrong there. And there's a lot of different types of businesses besides acupuncture that falls in here. I think, see, I'll just delete this really quick. See, so nutrition, medical spa, I don't know what mental health, that might be a little bit respiratory therapy clinic, travel medicine. So look what happens. I'm going to show you a little bit of where we put in just acupuncture. Now let's look at this a little bit because I'll show you these are actual transactions that happened. This is categorized by most recent date. So you can see the first one, this practice sold last year in June 2025, acupuncture practice. Look at this. This is where so their net sales, that's their revenue, $141,000. So it's a very small practice. Their operating profit, this is their net profit, was only making 2,000. So it wasn't making very much. Their EBITDA was negative. So see this number here, this SDE, the very important number we should all know. Their SDE was 76,530. Now, I don't know the details of this, but likely I could guess that the SDE here, because the operating profit was so low, the rest of the SDE was just paying the solo practitioner salary. That would be my guess. But you can see their net sales is under 200,000 and their SDE at 76K. The MVIC divided by SDE, that is the multiple, right? So the MVIC price, that's what it sold for. It sold for $35,000. And so if you divide that by SDE, it's 0.5% multiple of their SDE. So in this case, of course, I don't know the details. There's probably a lot of other context, but based off of this, I could assume that, this acupuncturist probably needed to sell. And I'm glad they were able to leave with something. But I'm sure all of you don't have the goal of exiting at half the worth that you bring in. I mean, if this person just stayed in business for an extra year, they would have made that same price. So that uh, I'm sure most of you are looking forward to a more successful exit than that. But of course, we don't know details of context of what actually happened. But it's interesting to be able to get an actual comparable based just on the numbers. Okay, so look at this one, the next one. So by the way, this is, it seems like there's not that many acupuncture practices that actually sold. This is the six that is only I could pull up in one database. But interesting, it could give you some ideas for your own. So this one sold in 2020, revenue 326K, pretty good operating profit, right? 100K. So if you're a buyer and you buy it, you know you have 100K working capital to work with. And the SDE was 105K. So it's what's interesting that the SDE, usually the SDE would be higher than operating profit. So I don't know how this owner paid themselves. But in any case, it's hard to know just by looking at this. But look at this. It sold for 170,000. So that's great, higher than SDE. So the multiple here is 1.6, much better multiple. But look at this. This is probably the most successful one. 2019. We'll go this later, but look at this. Their business description had a diversified services, not just acupuncture. They're doing 1 million in revenue. Not bad, right? With the operating profit at 330K. So I would say this is a pretty good business, right? If you put yourself in the buyer's shoe, would you like to own a business like this? I would say yes, right? This looks like on paper, just by this, that if you own this business and assuming that you have the license and the skill set to operate and practice in it, you would have immediately got $1 million business and you're going to make another 330K a month. I mean, a year, excuse me, a year. That's the attraction of acquiring a business rather than starting it from scratch. And what's great is there's a lot of different ways that you could structure the deal to make this happen, even if you can't afford it. Sold for 925,000. Even if you don't have 925,000 in cash, there's a lot of ways that you could structure it to make deals like this accessible. Which, by the way, I could throw out there, if you are a growing business and you have a good successful record, one way to grow your business is through acquisition. I think that's what Nell is thinking of doing too. So I'd love to hear what Nell is thinking about in that space, whatever she's willing to share. But look at this. This commands the highest multiple, 1.7. 1.7. So this one, if this was on the books, and I don't know if even now if this was in her investment criteria, whether she would go, oh, that looks like a great business. I'd be interested in learning more. Now, what do you think about that? If you had that business that just had these numbers.
Yeah, looks great on paper.
Yeah, exactly. So that's the first step is to attract the buyer, and you want them to say exactly that. That looks great on paper. And then that's why once they start to get to know you in more depth, you want to throw them with all this other stuff that you've been doing. Your patient retention records, your great sparkling reviews, your long-term employees, right? Diversified services so that if one business does poorly, another business does well. All of this were great to be able to add to a successful exit and increase your multiplier. Okay, so hopefully this was helpful just to give you a peek on some actual sales that happen. And then you could see in the past that, this magic 200K mark looks like this is 2019, so it's a little dated. This also commanded a 1.6 multiple as well, which was interesting because it's very small SDE. So that's very interesting to me. So anyways, it just gives you just some points to be able to think about. And combined with your own data of where you're doing, it could help see where you are. Okay. Okay, so I made this point already. You saw just by looking at the comparables, if you diversify your revenue stream, I'm glad Maya, you're creating your own brand of to be able to sell in addition to being an acupuncturist. That is great. I hope all of you are thinking about that. The more that you could diversify or and even categorize it in different parts of the book, or even putting in as a sub brand, like it's legally separated as a different company, all of that stuff will give you more option in the future because then you may be able to just spin out your acupuncture practice and just focus on your herbal supplements. It just increases your opportunities in the future. And it's always easy to bundle together and evaluate everything as a whole and sell it all at once. So the more that you diversify and then keep those separate lines of revenue clearly separated, and if you even separate it as different businesses so it has its own P&L, that's something to think about. Okay, preparing your business for sale. Most importantly is financial housekeeping. Um, I cannot emphasize this enough. Buyers today are extremely savvy. They're extremely savvy. If something looks weird on the books, what we're seeing today is an immediate decrease in interest. Like it doesn't even pass the first round. Um, Folks like Nell who have a practicing background and are adding an MBA and are getting into places where they study how to acquire really great businesses, we're seeing the savviness of buyers are just increasing. So, so even folks that, or maybe another practitioner, they're pretty savvy as well. So I cannot emphasize enough that you want to keep really great books. Try to keep your personal and business completely separated. Here's something else that I want to point out, and this we'll cover later in SBA pre-approval. Something that we have to tell all of our clients is you can only get your money back once. What do I mean by that? Many small businesses owners, understandably, and you should do this at the beginning, maximize your tax benefits. I'm not a tax advisor, but I was a small business owner and I did the same thing. I want to maximize my tax benefits. I don't want to pay too much taxes. And so, at the end of the year, I'm doing all these things to have some expenses or things that we don't need to minimize how much taxes I could pay. And then, of course, many of us are LLCs or even S Corp, so it's a pass-through entity. And so we want to get a nice return, a tax return in the new year. Well, here's the thing. Financial housekeeping and the last thing about SBA pre-approval. If you want a buyer who needs a loan, which is probably 80 to 90% of buyers, because it's very rare that buyers want to spend all of their own money in acquiring your business. It's much, much smarter business sense to leverage debt. And SBA in America, SBA is such an amazing lending program. It is amazing. You could get almost up to $1 million, and it's government backed. And because it's government backed, there's better loan terms from the bank. And so every business owner wants to take advantage, SBA. Well, here's the thing. If you want to have a buyer who needs an SBA loan, which again, I want to say is probably about 80% of buyers, maybe even more, the SBA preferred bank will need to evaluate the financial of the business based on tax returns, not on your P&L. So if your last 3 years of tax returns shows that you didn't make any money because you wanted to maximize you want to minimize your tax coverage and save on that side, then SBA will not pre-approve that. you will not be able to get an SBA loan, and you have immediately cut out 80 or 90% of your buyers. So that's why we say you can only get your money back once. If you're planning to sell within the next 3 years, if your desire is to exit in the next 3 years, starting this year, I implore you, don't try to maximize your tax returns when you file your taxes this year. Show as much as it is as what is truly, you want to show that your business is making as much money as possible. You'll probably have to pay a rather hefty tax bill, but it pays off if you have 3 years of that to get a buyer who could get an SBA loan, and that will help in the exiting of your business. So this is really, really, really big. You cannot, it's very, very difficult to have it both ways. And I have not seen a buyer who is able to do that. So if you want to get your money back from taxes, then you probably will not be able to get it back through the sale of your business. So I can't overemphasize that enough. If you take away one thing from anything here, it's you can't maximize your taxes and sell your business. Yes, if you want to buy the Range Rover and expense it on your business, you're not going to get the Rover money back at the sale of your business. The multiple of your business will be based off of what it shows on your tax return. Okay, so that's really important. I will say that 3 times. If that's the only thing I take away now that tax season is coming up soon, please think about how you will handle your taxes this year. And it depends on whether you want to sell 3 years or less. Okay. I think this is the only thing that I want to cover on this. The rest of the stuff I actually, if I was your broker, I rely on you as the healthcare professional. I assume everything's legal ready, you're HIPAA compliant, you have everything's in place there to be able to transfer it to a new buyer. Okay, we talked about seller financing before. We're almost time, so I don't have anything extra to cover on this. I could go deeper on this if you need to. Basically, this just helps a buyer. Usually, if they would do 10%, so let's say you want to sell your business for $1 million, like that person, that 2019 business. You make $3 billion in revenue, you have 300K in net profit, your SDE is 500K, you could sell for maybe $1 million. Likely, the buyer scenario in that case is about 10% down payment, right? So 100,000, 100,000 as seller financing, and then 800,000 as an SBA loan or a bank. That's typically how a common deal would be structured at the $1 million mark. So seller financing is, if you're open to that, that helps unlock more folks. More folks who don't have so much liquid capital, and it increases your buyer pool. Okay, yeah, so I don't have anything super important to say about this. When is the right moment? I just want to emphasize the personal readiness. It's really a personal decision. The only thing that I would say as a rule of thumb is sell when you do not have to sell. So if business is going well this year, or it has been going well for the last 2 years, I would think about selling when things are high. You don't want to get to the state where business is doing poor. That's when you start thinking about selling. And that is when I start talking to clients. Most of my clients call me when business is starting to not do well. And that is when it becomes increasingly difficult to sell. So when's the best time to sell? When you don't have to. So if that applies to you, you want to really think about that. Okay. I think we covered all this, the financial preparation. Make sure to document all your books, your market readiness, that's okay. Then the valuation and listing, that's when you would reach out to folks like me to be able to obtain your professional business practice evaluation or my opinion of it, to be able to look through everything and give you some advice whether or not you're ready to go and help you actually list it for sale. Okay, yeah, emotional set. Yeah, I won't cover that. I want to get Okay, this is some transworld slides. This is just how we help our process. So I won't get into this nitty-gritty right now. Yeah, and this is just more transworld. We'll just skip over that. Okay, so pitfalls to avoid. Number one, overvaluing your practice. Um, this is tough for sellers, and it goes into psychology. And I understand it completely. You've poured your sweat, tears, and blood in your life into this for maybe 20, 30 years. It feels like your business should sell for a lot more, for a lot. But this is but the biggest reason why a business doesn't sell, and sorry, I didn't include this in the slide. I have another slide for stats on this, is overvaluing your practice. Now, when you hire me as a business broker, we're like real estate agents. We owe you fiduciary duties. That means you as our client, we could advise you, but we can't make decisions for you. So if you tell me I could advise you what I think it could sell, and we'll do all of this business evaluation and be very objective about it. But if you tell me, nope, I don't feel it should sell for that, let's list it for twice as much. You're the boss. I will do that. But I know just from experience and statistics to back it up that the biggest reason why businesses don't sell is over evaluating. And typically, the source of over evaluating a business practice is the subjective psychology of the seller, because and I get it, it feels like you're owed a lot more. It just feels like it. So in this, I just hope to advise, keep an objective mind when we do the business broker opinion of value. We could always try to, we could try, but I just need to let everyone know that is the biggest reason why companies don't sell. Okay, I think I made my case about financial documentation. 3 years is typical business practice. 3 years, clean financials. Okay, and then the other stuff is important, but I won't go into that right now. Okay, tax implications. Okay, this is really important, and I think we're getting close to the end here, and we'll take some questions. This is really important. I have to say caveat, I'm not a tax advisor, I'm not a tax lawyer. But here are some things that we typically advise our clients. Number one, capital gains. That depends on what type of sale it is. There are two types of ways to sell a business. It's either an asset sale or a stock sale. If you are an S corp or a C corp, it could be an asset sale or stock sale. If it's an LLC, typically it would just be an asset sale. But each of the types of the reason why it sells has tax considerations as well as legal considerations. So let me break this down for you. Typically, what I see, a buyer would always want to buy a business, and this is in general, not talking about healthcare in particular, as an asset sale. The reason for that is in an asset sale, the buyer will create a new business entity and will buy the assets from your business, and it gets transferred over to the new buyer's business. The reason why buyers like this is because it provides a clean slate for them. In particular, the legal side. So if your business has a 50-year history, and one day a patient 30 years later out of the blue comes in, gives you a lawsuit, the buyer creating another company and transferring it under that protects the buyer. Because if it's going to sue the company, it will sue the old company, not the new company. So that's what buyer wants. Now, but if you do sell it as an asset sale, it's actually disadvantages to the seller, because if you sell it as an asset sale, it's considered as income. So it'll be taxed as income, which is much higher. So most sellers wants to sell their business as stock sales. Why? Because it's the opposite. In a stock sale, let's say you have an S corp, you own 1,000 shares of stock in S corp. You're the only owner. you're the president, the secretary, the treasurer, the vice president, and you're the whole board. There's 1,000 stock. In a stock sale, you just sell all of the stocks of that company to a new owner, and the new owner becomes the president, the vice president, the treasurer, the so on and so forth, and they own 1,000 shares. To you, that's very advantageous for tax purposes because if it's sold as stock, it's considered long-term capital gains, and so it reduces your taxable amount by a lot, right? A lot. Income tax versus long-term capital. I think long-term capital gains is what, 10%, right? That's amazing. That would be an amazing exit. But as I said before, that's usually a deal breaker for buyers because of the reasons that I indicated. They're afraid of any lingering liabilities that could not be caught during due diligence, and it surprises them after the stock sale trades. And then, of course, you being in the health profession, I'm sure you could tell me more than I. We're in California, a very litigious state. No one wants to be sued. So probably the buyer wants to kind of protect that and have a fresh start and not be surprised. Having said that, I have had some clients in the health profession whose buyer is willing to do a stock sale because of health insurance providers. All of the agreements was in the name of the seller's company. And so for them to create a new company, the assets transferring over new patients, that's easy. What could take, I believe, 6 months or more is to transfer all of the agreements and contracts and approvals for the insurance providers. So I think you all, especially business owners, may know more about that, but that's my experience. So long story short, most buyers will prefer and insist on asset sales, so just be expecting that that's going to be the case. Obviously, you want a stock sale better for your exit. But maybe in your industry, stock sale is actually quite reasonable if you have a lot of agreements and, healthcare providers and insurance providers and licensing and all this stuff in the business name. That could go easily with the stock sale, so the new buyer doesn't have to start over. Okay, so those are the things that I want to get across for tax implications and deal structuring. Now, it's not the end of the world if you do asset sales. There are some things that you can do to reduce your tax, your tax consequences if you sell for $1 million and you don't want to get taxed 40-50% off of that, and you only end up with a $500,000. There are things that you could do. It's not the scope of this. We could talk later if you're interested in that. Okay, I'll cover this really quickly. How long does it take to sell? Please expect up to a year. That's stats. If you did all the things that we're doing now and you are planning for the next 3 years to sell, it could be a lot sooner. Especially we're growing a buyer pool really quickly where we know exactly what buyers want. And then if we provide a business with clean books, great employees, really good patients, and everything checks the boxes, we could see it go really quickly. What adds friction to it and delays some of the deals is all of these yellow flags that I can mention pop up, and then they have to go back and forth and all of that. That's what slows things down, or sometimes even breaks deals. All right, so these are the key takeaways. Number one, always plan to maximize your value. This isn't just good business. This is just good for your patients and good for your community. I hope all of you have successful businesses and successful practices because that just means more people get helped. Plan early, plan now. It's beginning of the year. Do a business evaluation now. Do a back of the hand SDE. So, go through that checklist that we have here. And then, of course, if you want to engage some advisors, we're happy to be able to talk with you. Okay, and then I think this is the end of my slide. Here's my contact details if you want to get a hold of me and talk more. But I think this is done. Yes, so I am done. Maybe pass it back to you, Rob, for any Q&A.
Right. This has been great. And I think we're going to bring Nell up and Julie I don't know if you want to keep your screen sharing up or maybe take that down. Well,
Take
why
it
don't you
down.
keep it up for a minute so people did everyone get the info? Ray, maybe bring it up for one more minute. Just give people one more chance to catch your info off there. So we're going to have this up for another minute. So make sure you have
And I
Ray's
can put it in the
contact
chat.
information. Maybe take a screenshot. And we will be able to include that, and you can find Ray online as well. Okay. Thanks, Ray, for putting that back up. Why don't we take that down so we're a big screen? And I imagine there's some questions out there, and Ray and Nell, maybe you guys have some thoughts about, what came up tonight. The one thing, I work in a hospital, so I don't have a private practice right now. What's interesting for me is I wish a lot of this information would have been delivered in school, which we're so focused on having these beautiful practices serving our patients. But I think if we looked ahead with some of this information, like you could build something you could sell, you could be building an asset, not just a job, like you said. I think people might think differently and be more successful in practice by just following these rules and then having an exit strategy. So I keep thinking that this is a webinar I want to get into the hands of students. More students. There are some probably in this crowd, but I really do wish more of our schools and students focused on this. So I'm going to talk with you more about that, Ray, and see how we can get this into the people that are just starting their practices.
Amazing.
All right,
Yeah.
I'll pause there. And yeah, now I'd love to hear some more thoughts for you. And hey, for all you folks out there, questions, you don't have to go on camera or even do audio. But please, this is a great time. If you have a question, chances are someone else has a similar one or the same one. So let's chat for a few more minutes.
Yeah, don't let Rob pressure you. You don't have to be on camera. You don't have to be a crazy person like me at, midnight on the East Coast. Normally I would be in pajamas. Uh, but right, I think what was really interesting is there were certain things that you were going over that I'm like, yep, I did that wrong. Yep, I did that wrong. And now being on the acquisition entrepreneur side of it, I'm evaluating those same things in practice. So the tax thing is big, guys. Like I was, very proud about every write-off I could, possibly run through my business. And I had a consulting practice as well. So, if it wasn't going to work in the practice, it was going to work in the consulting business. And so it's really a different type of mindset. Um, Even if you're not thinking, it's going to happen in the 3-year time frame, now that I'm on the buyer side of it, I'm evaluating a lot of businesses where something occurred that it's not necessarily a negative thing with the business, but it's something in like the personal life of the owner, where they're like, hey, like now, I wasn't thinking I was going to need to sell and I'm going to need to sell. So it's good to kind of be thinking that long game and thinking, best practices and best case scenario, like what would we like to see here? And hey, Julie, good to see you. But the tax thing is hard because you are thinking about, the refund and the current thing that's happening right now. But it makes a huge, huge difference. And now when I'm looking at businesses, there's just like cutoffs for, EBITDA or for SDE or, what revenue looks like. And if you don't have the actual earnings, I'm not even gonna request the SIM to look at it. So that is kind of that first order of business, the financial piece.
Yeah. Yeah, and I'm just I was responding in chat for some folks. So, Michelle, SDE, seller's discretionary earnings, also called cash flow. That's really important it's a really important metric to know, especially if you're a beginning practice owner. And how you look at that is you look at your net profit, your P&L, which is a typical thing your accountant would do for you every month. You look at the bottom of your P&L, or right now, if this is your second year in practice or long, you take your 2025 year-end P&L, you look at your net profit, and then you add back all the things that you either had a one-time business expense you paid yourself, or any interest on loans, or any personal expenses, like if you took a you took a business trip to a conference and then attached a vacation to it, right? You would add that back on. So that's just a metric of what a buyer could expect money to be in the business. So that's how you would kind of calculate that.
Great. And then I invited Iris. I don't know, Iris, if you want to ask your question verbally, it's really fun to hear from all the different voices in the crowd. Uh, no pressure if not, but you did have a good question that I think Ray has an answer for. All right, Ray, maybe just take it.
Sure. Yeah, Iris. So, I hope that's helpful. It is possible to sell only your patient list. I would tell you, just as a professional, we wouldn't do that. I wouldn't know a way to. I'm sure this happens in your industry. I don't know of a mechanism to do that. So if you just wanted to sell your patient list, we would just say just sell your business. If you don't have a physical location anymore, but maybe you're seeing folks remotely or out of your house, it's pretty much the same as selling a business. So I wouldn't treat it any differently. If you only want to sell your patient list, I wouldn't know how to do that, but I do know it's possible.
All right. Pausing for more questions, thoughts? Such a different way to think about things. I know in some ways the way the webinar was positioned is, how do you exit? But really it's how do you prepare now so you have your practice as an asset? And oh, there's a good question from Ted. So
Yeah, that's a really great question, Ted. What are the biggest red flags you see when evaluating a business? Um, oh, or Raw, you brought him on. Did you want
well, I mean, the question's launched, but also Ted, if you want to have a discussion, you have the option to go back and forth with Ray as he starts to answer your question. And if
got it?
then I'll
Yeah,
just disable talking at the end. But there you
got
go.
Yeah,
it. Yeah.
can you hear me?
Yes.
Okay. Yeah, I mean that obviously is one of my questions. I definitely, like Nell was saying, I'm thinking a lot about how I use my business to minimize taxes and also generate revenue for myself versus getting it ready for sale. Like I've been in business for almost 25 years as an S corp and have, all of my books are super dialed, but I certainly wouldn't want to sell it today. So it makes me think about needing, I thought 3 years, but I would even have 5 years to really dial it in for maximum profit. I think that's all I would say.
Yeah, absolutely. You could do 5 years. The more, the better. I would say that most banks would only look at 3 years, and most buyers would only look like now. If you're evaluating a business, you look at 3 years financials, right? So that's usually
We look at three to start, but like if I'm actually in commercial diligence and under LOI, which is the case right now, we're looking at more.
okay.
But it also depends on like who your buyer is. We have to present it to an investor base and it's pretty diverse. So some people are going to see, and also it also depends on industry. So like when you're talking about integrative healthcare, a lot of people don't even understand what that means. And so there's like a education piece to that. And sometimes there's a lot of questions around like, oh, is this experimental? Or, is this a trend that's going to go away? And so sometimes there can be a little bit more scrutiny if you have investors or stakeholders who are not as savvy with the actual opportunity. So it kind of depends on the buyer. But yeah, I would say like 3 years is pretty standard. Um, yeah.
Yeah. Yeah.
And
So
I'd love to address the red flag thing too,
please,
because
yeah.
I
To
look
me,
at
the
a
red
lot of
flags are always
practices.
the red flags are always like financial, legal. Those are red flags. Like you just can't talk about it. There's a lot of yellow flags, but I say those are the two biggest
Hmm.
red flags. Yeah.
Yeah. And sometimes like a little hair on the deal is not a bad thing. So like yellow flags if there are things that are surmountable or understandable. Um, but red flags, other than the financial piece, is basically like physician concentration, which is all up in our industry, right? So if you got hit by a bus tomorrow, like would this still be a viable business? Like if you're actually in the space where you're, okay, I'm selling the business and I'm a buyer and I'm evaluating that. Um, because I know the integrative healthcare space really well, that's always my first question. Even if I see that there are several providers, I'm looking at, well, is this one provider tied to the most revenue in the business? Are patients going to return if that person isn't there anymore? Have they made themselves the brand to the point where, all of the referral relationships, and that was my issue in practice. Like I had, 90%, we really didn't have to spend on marketing because 90% of our patients were coming in as referrals from surgeons. But those were my relationships that I didn't do a good job at cultivating and bringing other providers into. And so, yeah, it's that founder dependence, that owner dependence, key person risk, can be quite a bit of a red flag, especially depending on who the buyer is and what their plan looks like for the business.
Great question. Thank you so much, Ted. Any follow-ups, or is that good, Ted? Thank you.
Oh, that's good. I didn't know if I was muted, so I was just trying to be quiet. So,
Oh, yeah, cool. I just didn't want to throw you off if you weren't done. All right, and I'm going to invite, we've got time for just a few more questions. So, Ted, thanks for that. It was a really good discussion. Um, Jonathan has a question. So, Jonathan, I'm going to allow you to talk. And if we don't hear from you, we can just read it off the chat. But it's way more fun to hear all the voices of everyone here tonight for our community.
Okay, yeah, I have a very busy practice and I have specialty skills.
Congratulations.
And just what kind of scenario in terms of selling the practice how would I be, they would need to be taught to the buyer in order for them to function at the level that I'm doing. So I'm just wondering what kind of scenario would I be planning for to make that happen?
Yeah, I think that's a common case. And so congratulations. I think that would just be negotiated in terms of the transition. Typically, typically in general businesses, the old owner they would negotiate to stay on for two weeks. But obviously, if there's some special skills, only you know, and by that time you would know that buyer too. So the buyer and yourself would have a good idea of how long it would take for the buyer to come up to speed, not just in the business sense, but also in the practice, the specialty skills. And that just gets negotiated during the purchase agreement. So it could be 2 months, it could be 3 months in which you get paid as a consultant post deal, right?
Mhm.
These are things that you could add in.
And
Thank
I
you.
would just add to that, again, depending on who your buyer is, there's a lot of different ways to sell and to transition out of your business. So, um, my current deal that I'm looking at, we're looking at having the owner stay on for like 8 months.
Mm.
And a lot of it has to do with relationships, complexity of business. Um, Part of that, like operational handover. So, and I also have a colleague who has a seller who is going to stay on as the chief marketing officer in a clinical practice because they came from a marketing background. They like doing that part. They weren't so happy about doing the patient care part. So there's a lot of different ways, like you don't have to leave tomorrow. And I think, the happy place is to make sure that there's a smooth transition, and that can just look a little bit different depending on the nature of your business and who's buying and what their plan is for it.
Right.
Great. Thank you so much, Jonathan. Thanks for being here tonight. I see Iris also has a few more questions, and that's great. And I wanted to just throw one out there too, which is we've talked a lot about, how to get it set up. I know since Kim and Julie and I read a lot of emails that come into CSOMA, a lot of people say, "Hey, I'm selling my practice. Can you put this, in your newsletter, or do you have connections for me?" And I'm just wondering, if and when that moment comes, what are all the different ways that someone, reaches out or considers who that could be? It could be another person. It could be like, no, what you're doing with the larger firm or representing a group of people, I guess. And so I'm just kind of wondering, like, what advice can I give members when they write in and say, selling my practice, can you advertise it for me? And I think there must be other effective ways that and valued information that I can share with them.
Yeah. So I could just talk about our practice with Transworld as a business broker. We always want to advise our clients to list confidentially. And so Transworld, we specialize in that, and we have a buyer pool, and looks like maybe and we have a buyer pool of hopes we could work on, and we list on business buyer platforms. So places like Biz Buy Sell and other places are some of the main sites that folks go looking to buy. All sorts of different businesses go. So what we do is we find a way to make your business listing as confidential as possible, and everything is managed by me, the business broker, to protect that confidentiality. Every buyer that comes in has to sign an NDA. We only give information as needed. We give a confidential SIM. We kind of scrub your financials in the beginning. If they're interested, then they move on to the next step. So I would always recommend to be as confidential as possible if you want to list it yourself. Um, or if you work with a business broker, not just transport, but every business broker, they pretty much do that. They list it confidentially, they shop it around to their different buyer pools, and then they manage everything legally so that you don't want to get the word out. Your patient comes back to your patients that you're trying to sell. So
And I would say my advice would be don't do it yourself. Like I I'm not a business broker. I'm on the buy side right now, but I have spoken with businesses that I know that would be interested in selling to me, and it's exhausting to find like those like what we would call proprietary deals. Because a broker is going to, I think honestly, like the most important thing, right, as a buyer that you guys do is like manage valuation expectations. So to get like a realistic idea of what your business is worth, because we all think it's worth more than it is when we're going to sell it, because we've worked so hard on it and are emotionally attached. So having someone who can give a little bit of objectivity to that process, a little bit of organization, get you in front of the right people, know what questions to ask. I think it's really important to do that. It's a serious thing to be selling your practice. And so I think you should enlist serious and knowledgeable people in that process.
yeah, thanks Nell for the shout out. I was trying not to be
I'll
self-advertising, but
say it
yeah,
for you because I
thank
wouldn't,
you. Thank you
I
so
would
much. I
just,
I could tell you from my perspective, selling a business is a full-time job. And while you're selling, if you decide to sell your business on your own, you can, just like you could sell a house on your own, but it's a full-time job, right? I said it takes a year to sell a business. So think about a full-time job, and on top of that, you need to continue your business and keep it running exactly how it is and actually make it improve over time over that year. So it's not for the faint of heart if you want to try to sell on your own. So, thanks Nell for the shout out. That's where our value add comes in. We work for you and take that off of your plate.
Yeah, that's really counterintuitive, right? Is to work with a professional company for a lot of people. Because I mean, Susie, I probably had 2 or 3 dozen people reach out through the last 10 years that I've been with CSOMA. Probably, yeah, 3 dozen people say I want to sell my business. So to not do it, that it needs to be listed confidentially. And I see Jonathan adding another thing that is there because they were talking about medical
Mhm.
records, there is HIPAA
Yep.
that governs the protection of patients
Yep.
and their information. So that must add another layer of legal complexity to it, I imagine, as well.
Yes, at some point we'll probably need some lawyers to be involved to make sure that we are HIPAA compliant. Your record retention, if it's an asset sale, you need to still be able to keep the records, right? And so again,
Right.
I'm not a lawyer on that side, but as a business broker, we advise you this is when you need to make sure you talk to a healthcare lawyer that specializes in your industry to make sure both sides are clear.
Right, because per our license, we do have to keep records for a certain period of time about patients that we've treated for malpractice and then the business itself. So, great comment. Okay, it's 9 o'clock, so I'm seeing there was one more question from Iris. Can a business be sold as one entity if two practitioners with different licenses have been functioning as two separate businesses in the same office?
Yeah. So I can answer both your questions. So if can you sell a business if you've given up the location where the business was? The answer is yes. And then your second question is, can a business be sold as one entity if there's basically two different businesses, right? You have two practitioners, two different licenses, each with two separate businesses, but the same office. The answer to that probably is not because we sell it by entity. But in that case, you'll probably want to talk with a business lawyer. You probably want to we could what we would probably do is talk with the lawyer really quick, or you just do some kind of merger if you want to combine entities and then sell it as one larger entity. For example, maybe you want to do that to increase the evaluation and things like that. That's possible, but you would have to take care of the corporate legal side of that.
Amazing. This has been such a wonderful topic and one that we've never explored through any of our educational programming here. And so great to have you here, Ray, an expert in this and a trusted member of Dr. Julie Tran's community too. So we know you're just doing amazing work in the community, trying to help people and help businesses, and we're all trying to help our patients. So thank you so much, Ray, for bringing your expertise here tonight and offering yourself as a contact for this. We just are so grateful. And Nell, thank you for being a special guest tonight. It's so
It
wonderful
was
to
fun.
have our president emeritus here with us, and just to see, like, you're just saying words I've never even heard you say before since you've gotten this MBA and gone. So I'm like, wow, I'm just sitting like, well, so smart too. So I'm just so
Oh my
grateful. Thank you for
gosh.
staying up till midnight to be hitting it with the CSOMA community this
I
January.
miss you guys and I love this community. And please like reach out to me as well. I know like Ray is a wealth of knowledge. I'm always happy to chat. And Ray, I will be reaching out to you.
Yeah, you guys are getting a lot of props here in the chat. So I hope you, before we end this webinar, take time to just enjoy that. Everyone that joined tonight, thanks for staying up late, West Coast late, not East Coast late, but West Coast late to be part of the CSOMA community. We will see you here again the second Tuesday in February with more fun programming. Sign up at csomaonline.org. Join CSOMA at csomaonline.org. Dr. Julie Tran, thanks for being our leader and president of CSOMA and for introducing Ray to this community.
You're very welcome. Ray, will we be able to use your slides and hand them out to our attendees?
Absolutely.
As
Just let me know how to get them over to you, and I'll find out.
Yeah. If you could send us a PDF, that'd be great. And we'll get that content out to everyone. Kim Newman, who's here, not here. Thanks for making everything happen behind the scenes. She is the magic glue of CSOMA for longer than any of us here have been with CSOMA. Maybe a couple members longer, but maybe not. There she is, Kim.
Yay,
Thank
Kim.
you for everything you do to keep CSOMA running so smoothly. We appreciate you all. We love acupuncture and this medicine. So thanks for being here to keep it going stronger every day.
Good
I
night.
think with that, we bid you good night.
Thank you, everyone. Good night.
Hey.